All right, traders, happy Tuesday. A Tuesday version of Ask an Analyst. This is Chris Pulver here hosting, and Tyson Clayton is joining me. Say hello, Tyson, to everybody.
Hey everyone, how you doing? Good to see you. Good to see you, Chris.
All right, you too as well. Hey, let's do this, man. It is a Tuesday, kind of a special edition of Ask an Analyst. We had our long Labor Day weekend. Markets certainly seem to move when no one's watching. We've seen some pretty exciting stuff happen late last week with some selling off in the stock market. That is transferring over into the currency world. We've had some great trades setting up, Tyson. I know one in particular that you have been talking about a lot. I've been with you on the trade. Aussie dollar finally going our way. Let's see how low
Finally.
this thing wants to go. Yeah.
Yeah, I love it. And I was just pulling up. I'd like to just pull up some ticker symbols, talk about some key levels. Aussie dollar finally moving in our direction. We've got the Aussie yen. I sent out the workspace about 3-4 weeks ago. Finally moving in our direction. Euro dollar. A lot of these trades are starting to pay off. We've been talking about this for weeks. It's the patience of the
Mm.
trader. The patience is going to start paying off, and it's finally starting to pay off. And yeah, I think given some updates and some levels, maybe thinking about locking in on some small profits and then selling again higher. We'll talk about that as we go today.
Sure. And just on the note, Aussie dollar coming up. So I'll just let you know. I mean, I still have 8 positions running on this currency pair. I am just around break even at 71.95. So that's my overall net position. I took some sell stops last week and closed those out. I took 3 of them. 2 of them I closed for over 110 pips each. So I'm taking off little bits, taking some profit, taking that margin, reapplying it. But Tyson, I want this to go down at least towards this missed monthly target at 6875. That's a monthly target from July.
Yeah, I'm looking at a target of 65.50. I had a target that was a little bit lower than that a couple weeks ago. 65.50 is kind of that it's kind of the area I talk a lot about supply and demand. It's kind of that origin of the move, right? Where did that big explosion move happen? That last explosion move,
Mm-hmm.
and it was kind of in a two-leg move. We had that massive low in March, and then it had that explosion move higher.
Yep.
Had a little bit of a pause around 60, and then another explosion. Actually, it's three moves: an explosion in March, a little pause around 60, and then another explosion, and then right around that 64, 65 level was another big catalyst for a big push up.
Yeah.
And so I'm looking for price to come back down towards that area where we're probably going to have some massive buyers sitting down there. And the way students and traders need to think about this is if we had big massive buyers down there before, then chances are those massive buyers didn't fill all the positions they wanted to. Even though currencies are super liquid, there's still probably some buyers sitting down there. And then also, if they're sitting down there, if they didn't get everything filled, and that's really where the massive buyers want to get involved, then and let's say they had got involved a little bit there. Well, they're going to start to take profits, right? Because the risk is to stay long and to give up some of some of the profits you have in. So they're going to start to take profits, and most likely as they start to take profits, price will fall. And where the buyer is going to be sitting, they're going to be sitting down there. And if they're sitting there, that also means, Chris, they're not sitting at 72 where price is currently. So I want
Right.
to start buying at 65.50. In the meantime, I'm going to start selling. I'm going to continue to sell. I'm down overall. I'm still down in the position. I'm getting closer and closer to break even. Now, I've managed this in a little bit of a different way. I held on to the trade for a little bit longer than I would have liked. I took some losses. And then I started to really aggressively pile back in around 73.25 and then right around when we started to break below this 70 230 level,
Yeah.
and then later last week and earlier last week I really started to pile back in, but I'm absolutely loving the price action we're getting. I love the weekly bar.
Okay. Yeah. Let's take a look at that.
The weekly bar just looks amazing after that huge run up. That looks great. And then this week also, the fact that we tried to rally early on in the week and we're starting to break below last week's lows. That's a
Yes.
really, really big point,
Yes.
because if we think about this, and this is so key, you look back, Chris, look back to the low in March, and there's one piece of evidence that has not happened all the way back since that low in March. We have not had a weekly lower close than the prior week's low. Hasn't happened once.
Right.
And so if this week, and this is going to be the big catalyst for those that are conservative, if this week closes below last week's low, so last week's low was 72.21. If we close below 72.21 this week, I'm telling you right now, this thing, I would have to say, I think there's probably based on the technicals, I think there's probably an 80 to 90% probability we're going down to that 65, 66 level.
Yeah, I love it. And you know what? One of my favorite spots right here, and I know you and I have talked about this, is the 6,700. You can see this,
Yes.
you know, this big, strong, aggressive breakaway weekly candle, and the same thing on the daily chart. So I have
Yep.
that highlighted as a pocket. You know, that breakout level you talked about 64, 65, are Fibonacci levels, man. I mean, the 23%, the 38% right here between 66 and change and 64 and change. I
Yeah.
mean, we don't have to be spot on with where we take profit, but I do know that I would not be surprised, and I do expect price to get into this yellow box for me to take off any sell trade. So, you know, I'm taking some partial profits. I'm maintaining a base position. I'm going to let this thing fall. You know, we know the market doesn't move in a straight line, so there might be something like this. I'll go to a smaller time frame. You know, perhaps we have something setting up where it gives us one of these, right? We fall aggressively down here, challenge these lows, we pull back one more time, form a flat, and then off we go to see this thing continue. Now, that's if we move in a perfect wave cycle. We might also see this thing just keep dropping, right?
Yeah, no, exactly. I don't necessarily think. I think that low that was put in March is going to be that's going to be a hard low to break through.
Yeah.
However, if I look back, and these are some of the type of crazy levels that when we get the environment we're in now with everything that's going on, everybody knows everything that's going on. We've got the Prime Minister of Japan resigning. We've
Right.
got rumors out of the UK of what's going on with Boris Johnson. I haven't even really been up to date on that. So there's rumors coming out there. What's going on with the election, the social unrest, COVID, all of this stuff.
Yep.
It's that kind of market environment where we start to talk about these crazy levels, and you almost look like you have three heads when you talk about them. But could we hit them? And I go back and I look at levels that were formed back in 2000, 2001, 2002, and we're talking about levels right near that 0.50 level.
Yeah.
And so could we hit that? I don't know if the March lows don't hold, and we're not going to just bust through that March low because that was an amazing turnaround move. But I tell you, I wouldn't be shocked if we don't get down to 65. And if we break below that 64, 65 level, we retest those March lows and we base in that level for a little while. And whatever breaks. So basically, after we break 60, if we break 64, we base between, let's say, 55 and 64, and whatever breaks. If we break above 64, I think we're probably going to 80 plus. If we break
Right.
below, we're going to 50.
Right.
And it's going to happen. Maybe we're going to all-time lows.
Yeah, you know, and it's funny because, you know, kind of talking about those large areas in this big scenario of like where this could absolutely go. It's like I agree. I think we could go to 80, we could drop to 50. But and it's new highs and it's new lows that remain to be seen. One thing I was watching really closely last week, Tyson, is the VIXY. So the VIXY, the VXX, they're all exchange traded funds that follow the volatility index. And one thing we did see jump pretty aggressively last week was volatility. So I'm actually curious as the market is selling off today. As we're talking, in fact, we have the S&P 500 is down 2.75%. The futures market's down 2.25%. Dow Jones down 2%. Nasdaq down 3+%. The Qs today, the QQQ is down 4.2%. So we definitely have some risk-off flows. My currency strength chart is showing some decent movement to the downside, and a lot of currency pairs that are risk on, and some movement to the upside. What is risk off? So let me actually check and see. So this is the VIXY, and you know what? I decided last week, Tyson, I put in a buy as a tester at 22.90. We actually talked about this live in my sessions last week, my flex trading room. Look, I did not want to buy it at 22.90. I wanted to buy it at $20, but I put in limit buys. I'm like, here are my thoughts. I thought that the market could just continue to see Fed accommodation, volatility suppression, because we have so much liquidity getting pumped into the markets with these accommodative policies right now that this might be the perfect setting, but I thought, you know what, maybe the Fed is going to push this down into these March lows again, and then it's just like, it's too easy, it's too obvious. So of course the market's not going to make this as the low. It's like it's right at $20 or just below that. Now look, I could see this coming back down to lows, but to get people excited about it right here, push this down one more time into this sub 20 area, and then we see a big run to the upside. Now that would take enough time to start building something up in and around the election in November.
So that's interesting. I don't want to get too wonky on you, but one of my favorite futures trades of all time is a volatility index calendar spread.
Okay.
And it's essentially taking advantage of when the market is 90% of the time it's in what's called backwardation, and when it goes into, or it's in contango, and when it goes into backwardation, which is essentially when the most recent futures month, so for example, the September contract of the volatility index is trading above the October, and the October is trading above the November. So because volatility, here's what a lot of people need to understand: volatility is always priced, or 90% of the time, it's priced in contango, which means it's priced higher in the future.
Right.
The reason why it's priced higher in the future is because we as humans, we have a tendency to think we know what the risks are tomorrow more than what the risks are next month or next week or next year. And so we're always going to overprice volatility for the future and underprice today. Now, here's where it gets interesting. When we go into what's called backwardation, and there's a signal that I've used for years called perfect backwardation, and it's essentially when we get 3 months in a row, this month contract is higher than the next month, that month's higher than the month after. That's what's called perfect backwardation. And that's almost like a 95% signal the market's going to sell off like 10, 15, 20%. Big. So we're not in perfect backwardation right now, but I say all that to say this. The spot price of volatility as of this moment is sitting at 32.30.
Okay.
The September contract is sitting at 31. Here's the deal. In 7 days, that has to meet.
Okay.
The spot price has to meet the futures price. So what that means is either the market needs to settle in this area right now and stop selling off, or we're going to see a massive capitulation move lower, and volatility of the front month, this month, is going to spike higher, which could take us. So here's the deal.
Yeah.
We're not going to move. My point is we're not going to move higher aggressively, but we could potentially see a big continued capitulation move down over the course of the next week, because those have to meet each other.
Right.
And so what's going to be most interesting is next week when we're talking in the session is once we start to realize what the October, because once that September contract drops off, then we're looking at the October contract. And if we look at the October, November, and December contract, those are already in perfect backwardation. So that's really interesting, because right now we're in a kind of a wonky curve right now with the next 7 days. We're either going to have a capitulation move sell off, or it's going to stay still. But it's really setting up for what's going to happen in October and November. And next week we should get a clearer picture on, are we due for this continued correction, or is the market going to kind of stabilize and float higher? And honestly, looking at this, I think your trade is spot on, because I'm looking at this and I think that I think if I had to guess, I think we're going to settle in over the next 7 days, and the spot price is going to come down to the futures contract rather than the futures going up.
Right.
So that'll mean the market's going to settle in.
Right.
Then it's going to set up for October, but I'm actually looking at some of the SPY levels here, and this will fit in right with your VX. What was it? VXXY?
So VXX and VIXY are both ETFs that I'm trading. Yeah.
Yeah, VIXY. So it'll settle right into that 2021 level. So essentially if the market stays still, I see a sell-off down to about that 2021 level, but then that'll set up perfectly for a buy opportunity, because I think, looking at that, I think the market's going to bounce around. The SPY is going to bounce around this 334 to 340 level over the course, or 338 level over the course of the next week. And then that's going to set up for that next move into late September, October, that flush down. And I'm looking for a move down to into the election, maybe even by the election. I'm looking for a move down to about 310 in the S&P 500, which is what is that on a percentage basis? Let's call it.
Yeah, let's say we had high, right?
35 points.
Yeah, I was going to say we had highs at 358. So down to 300.
Let's call it 30 points, a 30-point sell-off on we'll say a 30. So we're talking about another 12. So what I'm seeing here, Chris, is I'm seeing this. I think the market is going to stay within about a 2 or 3% range the next week, and most likely float higher, followed by a perfect setup in the VIXY to buy at 20 to 21 for that next push lower in the S&P for 12%, and that, Chris, should take the VIXY from 20 to maybe 30 or 35. It should pop huge.
Yep. I was looking at those equal highs. It's like $35 to $40 is like a really obvious level that we had back in March and April, when things were kind of stuck between like what's happening between the stock market bottoming and volatility. All of a sudden we had that big peak in the middle of March, and then late March it was starting to come down. And as much as I saw the Fed backing everything and that V bottom hitting the stock markets, I'm like, these volatility instruments are going to crash. And I was short the VXX back in April.
Yep.
And for that reason, because I'm like all this liquidity, all this, kind of financial engineering is now going to suppress volatility once again. And again, what you saw back in 2008-9 is the same thing. I mean, for literally like 2 to 3 weeks, crazy volatility. After that, suppress it. It's amazing how fast it goes up and how fast it comes down.
It is. The one thing I'm going to say, so here's a perfect trade, not a perfect trade. There is no perfect trade, but here's a really, really nice trade that I love. I love buying. I think I could set a limit order to buy the VIXY right now at 21,
hmm
target 35. The issue with a trade like this is stops are difficult because because they're you're buying a decaying asset,
hmm
right? You're buying, and that's very important for people to understand. Again, not to get wonky, but when you buy the VIXY, you're buying something that if the market doesn't sell off tomorrow,
hmm
even if it sells off just a little bit, it can decay in price because of the way it structures its assets based in futures price, which is a decaying asset. But anyway, that's for another day. So it's hard. My point is, it's hard to say, oh, my stop's going to be, because I look at technicals and I say, oh, the stop at like 17.20 would be good,
Right.
right? So
Right.
I'm risking $4 to try to make $14. Great trade. However, I would want to trade this. I'm not gonna ever recommend trading something without a stop. I think a stop right around that 17 level would be fine. But even if we floated down from 21 to 20 or 18 and we're
hmm
getting close to the election, I don't necessarily think I would take the trade off, even if we get down to that 17 level.
Yeah.
But I think just to kind of bottom line it, I love buying at 21, putting a target at 35, and I don't think we're even going to get close to that 17 level. So I think you're going to be fine putting a stop there. I think that's and actually I think, Chris, what you have in that trade, if we think about this,
hmm
and this is, we got to wrap our minds around this. We're talking about a trade in a month and a half, maybe even sooner, because that's a move that could literally happen in 3 days, right? I
Yeah.
mean,
Yeah.
we're talking about a 66% return on your investment
I
if
know.
that trade happens. And I think it's a fairly high probability trade based on where the market is right now,
I
Chris.
know. And going back into March, and I've been saying this in my trade room, it's like, look, I was like 99% certain that starting 2020, I was going to short the stock market.
Yep.
So I was buying inverse ETFs, I was buying puts, and I was shorting the stock market, and it worked out great if you
Yep.
had the timing right. Which, March made sense, pre-summer push in April made sense, everything happened late February, early March. Look, I did not time that very well, but I was long on inverse ETFs, I was long on the VIX and ETFs with volatility, and there was decay, but man, it paid it was like 300 to 600% gains in like
Yeah.
3 weeks. It was insane, man.
Yeah.
So
It's
I
nuts.
go this go around. I'm like, look, I don't know if we're going to get back to those highs in March. I don't know if we're going to get back to the crazy lows we saw back in March in the stock market. But I
Yeah.
will say the safer instrument for me to play and look at, and not necessarily worry about the timing factor, is volatility. I think that the expected volatility is higher, implied volatility is higher. It hasn't quite translated into the Forex market yet. I mean, our day-to-day trading ranges are still not jumping off the grid. We still have like really contained day-to-day price action.
Yep.
But just like we had back in February and March, like when it starts to happen, it's like circuit breakers are going off, and it's like there's just a flood of movement. And
Yep.
it's so I feel like it's going to be kind of this reaction. We're going to start seeing prices moving, and it's going to be like, what is going on? And
Yeah.
rather than having that reactionary mindset like we had back in March, like, holy crap, we need to contain this stuff, this
Yep.
go around, it's more like, let's jump in with short-term action. Let's get some short-term systems deployed, and let's take advantage of this. Like, we might only have it for another 1 to 2 weeks whenever it happens, but there's so much opportunity for us to grab some really good trades and really good movement in a very short amount of time that
Yep.
I just want to make sure
Well,
that
not
we're
only
doing whatever we
that,
can to finish strong.
Chris, but I think you could absolutely trade it like that. But I also think you could have high levels of conviction on some swing trades. Like, for example, I don't
hmm
think we need to be in a whole big rush to try to overmanage our Aussie dollar or Aussie yen positions,
I
right?
agree. Yep.
It's kind of like, because I get in this mentality sometimes where I try, like, okay, the price is moving in my direction, things are looking well, and then I start to overanalyze and I
Yep.
start to look left and say, okay, we're coming down to a level of support. Oh, you know what I'm going to do? I'm going to get really, because I'm really, really good. So I'm going to lock in my profits. Now, even though we're coming down another 500 pips, I'm going to lock in here and I'm going to sell higher. I did the same thing on the pound New Zealand a week and a half ago, Chris. I
Okay.
had a brilliant short set up. I shared this out with all the traders. I shared this on my Facebook page. And the initial trade was to, let me pull this up. The initial trade was to sell the pound New Zealand down to, my first target was down to 93. I
Okay.
started selling in a webinar. I was like, hey, let's look to start selling on a break below 2.
So
Worked
right
out
here,
brilliant.
right, literally
Perfect.
right there, man. Yeah,
Yep,
perfect.
worked out perfect, and the trade was awesome.
Yep.
Late last week, I came in, or early last week, I came to the webinar and said, "Hey guys, we're coming into this area right around this 97, 98 area. We're coming in. I'm expecting a bounce.
Mm-hmm.
Let's take off some of our trade. Let's sell again at around 99.50." Here's what happened: price bounced where I said, but price only went up to 99.30. I missed my
Yeah, I
reentry
know.
by 20 pips, and I didn't get back in, and I'm like, oh my gosh, I just left. So I made 200, 190, 200 pips on the trade, but I left. Man, I left probably another 200, 300 pips on the table.
Yeah.
And so I don't want to do that with the Aussie dollar, Aussie yen positions that I'm in.
Yeah.
So I want to have strong conviction in my moves until I'm proven wrong.
Mm-hmm.
And I don't think that there's going to be much that's going to prove us wrong other than time. I need to give these trades enough time, and we've given it enough time. And now let's let the patience that we've built into the trade pay off.
Sure.
Let's not get too cute on it. With that being said, there are times that we can take a step back and say, okay, well, I've got a decent profit in place. I am expecting a little bit of a bounce. Should I just stay in the trade, or can I deploy maybe a shorter term strategy to maybe manage the trade a little bit better than I can?
Yeah.
So you can absolutely do that too. But yeah, I think it's both ways. Either way, Chris, I think no matter what in the environment we're moving in, what's interesting is we're seeing some pairs not do anything and other pairs move pretty good.
Yep.
It's kind of the difference between the haves and the haves nots. And it's one thing that I do know it's gonna lead to for me is I believe that this is going to lead to one of the best times for me in the market this year was in March. And it was when we were talking about stocks and I was selling a bunch of puts,
Mm-hmm.
and I collected just a ton of premium. And so what I'm looking for is I'm looking for the market, like we said, the market to stabilize, have that next flush down, probably starting maybe not next week, but the week after.
Mm-hmm.
I have the next flush down. I think spot volatility will spike above 40, 45, maybe
Mm-hmm.
even into the 50 level again. At that time, guys, volatility premium on stocks like Disney, on stocks like TCF Bank, FHN, stocks that Coors Beer, all the stocks that I've loved for a long time, Capital One will be skyrocket again, and we'll start to sell those premiums and get paid a bunch of money again. And so that's what I want to do. So I think in long-term portfolios, I think right now the volatility rates aren't high enough for me to want to sell. They're high, but they're not high enough for me to want to aggressively sell premium.
Mm-hmm.
But here's the interesting thing: they're too high for me to want to buy. So
Agree.
I'm caught in this really weird situation in my portfolio where it's like I typically look to sell high premium, and we're relatively high historically.
Yeah.
But we're not high enough based on everything that could happen.
Yeah.
So I'm kind of in this cash position, which I'm fine in, but there are some spots I'm hiding out though, Chris, that I love. And I'll talk about that real quick. I feel like I've digressed a little bit here, but you want me to talk about some of the places I'm hiding out?
Yeah. Go. Yeah, please.
Okay. I feel like I'm going in a million directions, but anybody who knows me knows I have ADD. So, so that's just the way it works, right? No, I'm hiding out in a lot of traders and students might have watched or heard of Nikola, right?
Mm-hmm.
Nikola, and Nikola was a SPAC, special purpose acquisition company, and they went public from essentially a shell company called Vector, and I think it was like Vector Investors or whatever it might be. But they're just basically a blank check company, and it priced at $10, and basically went from $10 into the merger, went all the way up to $90, just craziness. And then it fell back down to like 35, and now it's rallying big again today.
Mm-hmm.
Well, the same thing, and I believe I talked about this, I don't know, a month or two ago.
It's been a while. I remember you talking about this one.
About a company called Helion.
Yeah.
And Helion is SHLL. When I was talking about it, it was trading at about $20 to $25. It's now sitting at 54. And it's making the same exact move that Nikola did. And so it's been amazing. Problem is there's a lot of the big pre-merger move, because that's what it's building into, the merger. It's kind of like the IPO,
Mm-hmm.
has already happened, right? So that move from 20 to 54, that's a lot of the move. Now it could go to 70 or 80 like Nikola did. But I want to invest in the ones that still have the juice. The best one that I know that has the juice right now, that I'm actually in a pretty heavy position in, is is a Fisker. It's basically
Oh yeah,
it's
that's
an
the
electric
Tesla rival.
the Tesla rival. Yep, it's
Yeah.
an electric car company. I think they make better looking cars than Tesla. I know that there's a lot of Tesla disciples out there like, oh, what are you talking about? No, I think they're better looking. Problem is they just have they haven't produced any that people can buy yet. So that's the issue. But they are set up to do the merger by anywhere from October through January or so. The rumors are it's supposed to be sometime in October, but it could be a little bit longer. Here's what's brilliant about it, Chris, is that it's a blank check company. The ticker symbol is SPAQ, blank check company. And if the merger falls through, which, there's like a 1% chance it could, right? It's a binding agreement and all this, but who knows? Something could happen if it falls through, which again, I think it's very, very slim to almost no chance. If it does, it's got a liquidating value of $10.30. So your downside with it trading at $14.30 right now, your downside is $4. That's your downside, which is a decent, amount of percentage. But here's the upside potential. We're talking about a potentially $40, $50, $60, $70 stock.
Yeah.
And how do I come up with that valuation? Because I believe it's going to follow along the same lines as Nikola did, and as SHLL did, and as these other SPACs did. And I think we're going to see a massive move, and it's going to set up. It's going to give you some time, but it's going to set up into the merger. And so you got probably a few weeks before this really starts to kick into gear. But I've been hiding out in it. It's been doing pretty well in the sell-off last week. It did really well. So I've preserved some capital there. I've got a really big cash position, so I'm waiting for some of my favorite stocks to fall. But SPAQ is one of the only stocks that I like holding as a long-term play at this current level. And I think it's an easy, man, I think this could be a quadruple by the end of the year, Chris.
Wow.
Yeah.
Well, I did. I mean, you and I talked about it. I did take a position. My break even is 1280. So I'm up a little bit on that. I've added to it. I've got chart alarm set right back at the lows in case they get there. I've got some buy stop levels sitting here at the highs, like $16. I've just got chart alarms. I'm looking to like throw more in, and just add more to it.
Here's another brilliant part about it that is so awesome. There's the number of shares on float that are going to be offered to the public is going to be about 10% of the overall company. They're going to have 295 million shares offered to the public, but 90% of that is institutional locked up, institutional owned by massive institutions. So we're talking about very little supply on the market of a company that's going to have a lot of headlines and have a massive demand.
Wow.
It's
almost like it's unattainable. It seems like with that much institutional interest, it's like almost unattainable to the retail trader.
Well, here's the deal: that's the type of the get up that you could wake up and this stock could be $100, and in 3 months this could be $150 stock. I actually think with just the normal projected growth rates that Fisker is putting out and that what they're assuming, Goldman Sachs says that there's going to be 8 million electric vehicles on the road, 8 million sales in 2025. If they even capture 5% of that, we're talking about a $300 to $350 stock, Chris.
Mm-hmm.
Yeah. So
I love it. Let's hide out in that.
No doubt.
Hopefully nobody's listening to this,
nice.
Tyson.
It's been uncorrelated. It's been uncorrelated to the stock market, which is good. So it's a good place to hide out in as I'm sitting in some cash, as I'm playing my currencies. And, but one last thing with this is you got to be willing. It's volatile. It could go, it could be trading at 1250 tomorrow. Right. Yep. But again, I'm in this for me. I'm in this at least until probably a week or two after the merger at minimum.
Mm-hmm.
At minimum. So in the earliest date of the merger is going to be, from the rumors that I'm reading, is going to be mid-October at the earliest. So This is at least probably a 2-month hold for me, but maybe even longer.
So. Yeah. Well, hey, we'll see where it goes because I'm right there with you. So this will be fun too. This will be a nice little, maybe December celebration with this one popping for us. That's cool. I was looking at some of this last week. I'm sure did you catch this gap on Zoom?
I didn't. No,
dude. They were so expensive last week, Tyson. It was so I couldn't really justify margining up $10,000-$20,000 to take this trade. But man, do I wish I took this trade. This was a close of the day. This goes back to last week. So the close was on the 1st. The close was at 457. I was looking at buying 455 puts and just running with this thing. It's down to 352, man. That would seriously, oh my God. I'm so angry. Like, that was such a good trade.
It is. I mean, it's amazing. Now it makes me want to look, and again, I I look at a company like that that's ran so much now because it's fell so much. Now I'm thinking, should I go and start selling some puts and collecting some
Yeah.
premium on it? But man,
Yeah.
I just don't know. I mean, these I said this, and I think I've said this to you, and I said this on these videos before, where rolling into this year, I've been bearish for 2.5 years, Chris.
I know.
But my thing that I've hedged with was I don't see euphoria. That's the one
Right.
thing that I was like, you know what? Every other crash in history has led by euphoria.
Hmm.
So I was like, I don't see it, dude. There's euphoria everywhere now. I mean, it's
Yeah.
you look at Zoom, you look at Tesla, you look at even Apple, and all of these massive $1 trillion, $2 trillion companies, and it's like, man, that is one-sided trade, and it's that's getting to the point of a little too rosy, and it's getting to a point of euphoria. And here's what happens: everybody starts to sell and
Yep.
starts to say, "Man, I got a lot of money, a lot of profits in this," and everybody starts to run for the exit at the same time, and
Yep.
that's when you get these type of moves, and it might not be over because I think there's a lot of margin and leverage out there too, Chris,
Yeah.
that people haven't necessarily taken care of yet. So we gotta.
Yeah. Well, let me ask you
This
this.
could get ugly.
And let me ask you this. Do you think that the timing of these sell-offs for this week and last week have anything to do with these official splits of Apple and Tesla? Look at how loved Apple has been. Look at how loved Tesla's been. How many people are like wanting to get back in. You do a 4-to-1 split on Apple, a 5-to-1 split on Tesla. Where do you think Robinhood traders are going? Which is now being investigated by the SEC because of this high frequency trading garbage. But it's like Robinhood has $11 billion in subscribers, $11 billion in services. Like they're paying a $5 to $10 million fine. They don't care. They'll probably be fine. But like I think this is like that Wall Street secret revenge against Robinhood for all these, all these people, all these millennials that are on their phone just like buying whatever they can, and all of a sudden you get a chance to buy Apple at $130, and where's it go? 115, 110. We'll probably see 100, maybe $80, which I'm totally fine. Like let's see it because I want to buy it, but I'll wait. And dude, I was so tempted last week to buy it at 125, 120. I'm like, this is so dumb. Like a split or no split, like you don't have any pullback here. So I waited, and I'm glad that I did because I'm just waiting to buy it like 100. If we get to 100 or lower, I'll start looking to buy Apple
the,
again.
the, the one thing, and I said this with JICJED. I
Yeah,
said we're
yeah,
gonna go back into a time when valuations can get thrown off and not matter for a little bit until we wake up and realize, wait a minute, we got to live in real land.
yeah.
Sometimes. Now, again, these are good companies, but man, Apple trading at 30, 35 times earnings.
Yep.
Every time it's ever done that in the history over the last 20 years, guys, it sells off massively because it trades at around between 18 and 22 times earnings. That's just the way it trades.
Yeah.
That's the way it's always going to trade. And so the one thing we've also got to understand is, man, and this is so important. And this is why, if you're going to do this, get the right education, be with the right people, get into our trading rooms, right? Very important.
Mm-hmm.
But also, I was watching, I think I was watching Fast Money or something the other week, and somebody called in, and he's like, "Yeah, I've been an investor in Apple, and I've done really well. I went through the last long-term investing. I went through the last stock split. So think about this. This dude, because he had enough patience, and he just said, listen, I'm gonna invest in a company I believe in. Bought one share and turned it into 28 shares because it went through a 4-to-1 split and a 7-to-1 split. That one share is now 28.
Mm-hmm.
You think about the wealth building effect of that. That's nuts.
I know.
That's crazy. And what did he have to do? He had to buy it, hold it, believe in the story, and be patient.
And not touch it. Yeah.
Not touch it. Now, here's the deal. We're a trading company, and I'm a trader. So there are stocks out there that you should be long-term in. Like SPAC, I might be long-term in SPAQ. Like that might be one of my long-term. Like I'm just going to let it go for 5 years and just let it do its thing. And you know what? I probably would be, because I don't know of another trader out there, Chris, that if you would have bought Apple in 1999 or Amazon in 1999, 2000, there's not the greatest trader in the world that beat the performance of just buying and holding.
I know. Yeah.
So there's some of these stocks, but you got to pick the right stock. But in the meantime, let's generate some income around the currencies. Let's be smart about picking, when we get flash sell-offs, let's pick some high quality stocks that we're willing to own long term. But if we can make a bunch of money right away, let's do it.
Yeah.
Let's take some shots on that VIXY. That's because that's more of a pure. That's not something, by the way, I would never think about holding that long term. That is not a long term hold.
Right.
But it's absolutely one of those plays that you buy low, you let it pop up, you get out, you make some good money, and then you take that money you made and you maybe apply it towards some of your better high quality long-term investments. And that's what you do.
Just keep adding that cash injection to it. Yeah.
That's it. That's it.
So
So
I drew on the screen here K because that came up last week. I was reading an article on, okay, we've talked about the U recovery, we talked about the V recovery. Now we're talking about the K recovery, which is I really think there's a lot of truth to this, where I think the companies that have done well throughout this whole time, and you start to see where all the big money is going and where all the major concentration is in the stock market with very few stocks. I can definitely see that when this all shakes out, for better for worse, who gets elected president and how things are just happening in the stock market, I can see this kind of, and again, it's unfair, but like this unfair concentration of really strong monopolistic type companies do very well, and a lot of companies don't.
Yep.
Right?
Yep. Well, Chris, I think that's the world we're living in.
Yeah.
I think the one thing that's happened for sure, um, good or bad, and I don't necessarily know if there's any good about this, is the gap between the haves and the have-nots in all aspects of life, I think
Mm-hmm.
has widened to a wider point than it's ever been.
Mm-hmm.
And that's actually part of the reason why I love what I do, is because let's say that somebody's watching and they're like, man, I'm a have-not. I just got laid off and I just, I'm going through this crap and all this kind of stuff. And well, guess what? Learn a skill. As long as the market opens up tomorrow, we've got a skill where we can generate some income.
Mm-hmm.
And so that's why I love what we do. But you're right. I think that we are in a world where it's the gap between the successful or non-successful haves and have-nots is going to grow. And honestly, the only way it's going to stop is it's going to get to a point of ridiculous, and then there's going to be a revolt.
Right.
And there's going to be, because once a monopoly takes hold, it gets to a point where you can't compete. There is
Mm-hmm.
no competition, and then there's oh man, you know what? I'm sick and tired of the big thumb pressing down on me, and then there's a big revolt that happens, and then big change comes.
Yep.
So that'll eventually happen, but that could be years and years out. But I
Yep.
agree, we're going to have this widening of the gap is going to continue, and then it'll lead to a revolt, and then that'll lead to more chaos, and then we'll have a reset.
Yeah. And it's just
Yep,
it's
that's
just
and
how
then
violent
you'll
is a
be
reset, how bubblicious is it, you know?
yep, and then you'll be thanking yourself that you hid some money in crypto.
There you go.
Right?
Yep. Some SPAQ, some crypto.
Yep.
Yeah, super interesting. So look, we keep coming back to what traders should be doing, what viewers out there should be doing. It's like, look, we have a lot of great trades out there. I know that there's so much opportunity from now until the end of the year. I think that volatility is going to pick up now as we get through Labor Day. It's like now it's kind of full force to finish up Q3. October is usually a very violent, turbulent month for stocks. And again, we might have some weird, pre-election pause or some oscillation, or it might just be all hell breaks loose going into the election, when it's just like you can't tweet your way out of it, you can't headline your way out of it. It's like what happens is happening, and you're either on the right side of it or you're not. And so I know that I'm
Yep.
very much trading with the head on a swivel, and I want to be positioned accordingly. I love your thoughts on either collecting those premiums if you're trading options.
Yep.
I mean, I've had more short-term gains this year in stocks than I have had probably ever.
Me too.
And it's
Me
not
too.
bad because so what I'm doing is I'm taking that cash that I've been sitting on the sidelines with, since I took a lot of short-term positions, and I'm waiting to buy the likes of Amazon on a pullback,
Yep.
Microsoft on a pullback, Disney on a pullback, Apple on a pullback. I'm waiting, right? I want to buy good companies, but it's like I could not last week, the week before, for the last month, I can't justify just dumping money into
Yeah.
all-time highs and these just euphoric runs.
What's crazy is I've had more short-term gains this year in stocks than I've had probably ever also, but they
Hmm.
were all in long-term positions. They
Yeah,
were all
very
in
true.
positions that I'm like, you know what? I'm willing to buy this long term. I'm willing to buy this. I'm willing to buy Capital One long term
Yeah,
between
but you're like,
40 and
I just
45,
got
and
it.
then the thing just
Yeah,
skyrockets. And I'm
I
like,
know. I
I
know.
got to take profits. And I
Yep.
left some money on the table. Like,
Hmm.
hey, from that balance, I mean, I could have been up 100, 150, 200%. I made like 45, 50%. But you
Hmm.
know what? I'm gonna
Yeah.
be okay with that. Like
Yeah.
that's a pretty heck. I'd be okay with a 50% return in a 3.5, 4 year span, let alone a 3 month span.
Yeah.
So I'm gonna take that in my long term investments.
Yep. Yeah, it's been absolutely awesome.
Yep.
And I don't think we're done. I think we're going to get
No.
another, similar phase like we had back in March.
Hmm.
Maybe not the same direction, maybe very different, but it's like I do think that we will have lots of opportunity ahead. So again, trade the right way, trade
Yep.
conservatively. Equity management is the most important thing that matters for any trader out there.
Yep.
And again, I think with if you have the mindset of a long-term position, if you're going to buy something with a willingness to hold it, then do it. If
Yep.
you're looking to speculate, if you're looking to be short term and you got to get the timing right, you need to have firm exit plans. Like if you're going in heavy on anything and you're wrong, that's not where you just all of a sudden start convincing yourself like I'm going to hold this long term. If
Yep.
it, you got, I think you need to go into things ahead of time with the plan of this. Is this a long-term decision or is this a now decision? And the
Yep.
now comes with like be ruthless on those losses, get out quickly if you have to. But I like long term because I'm going to trade more conservatively, build my position in the areas that I want. And I'm hoping right now, Tyson, Aussie dollar, Aussie CAD, Euro Swiss, Euro dollar, pound dollar, all those positions right now are doing great for me.
Yep.
And
Yep.
I think that there's probably for one of my one of my larger accounts, I'm looking at probably like 5 to 6% large gains on
Nice.
that. Which for me, for having several accounts and the amount of capital, like me making 15 to 20% a year is killing it.
It is.
And I'm
It
right. I'm
is.
right at like 14% right now for the year. So for me
Love
to
it.
get close to that 20% threshold, I'm super happy with that. And average hedge fund right now is down like 4%.
Yeah.
Average
That's. I
hedge
mean that.
funds, right?
The difference in return on that, Chris, is absolutely phenomenal. It's part of the reason why I say you're one of like maybe three people that if I ever decide to just right off in the sunset that I'll actually give my money over to manage for me because I'll be happy to make 14-15% on an annual basis every year.
Yeah.
Trust me, I'm doing everything I want to do if I can get those returns for extended period of times. And so is everybody listening. Those
Yeah.
returns are phenomenal in long-term trading.
Yeah.
Yeah, I agree. I think that these plays, be patient. But be patient and nimble, right? Let's
Mm-hmm.
be smart about it. But know if you're in a long-term investment, you have a long-term kind of goal and you have a high conviction. Aussie dollar being one of those. You have high conviction on something, then maybe don't trade. Maybe just stick with that pair and let it do its thing and find another Aussie pair that you can be a little more active in, right?
Yeah.
You don't have to get out of that trade and then be active. Maybe let that do its thing. Get into another Aussie pair and be okay. I'm going to be active on the Aussie yen and I'm going to let the Aussie dollar do its thing.
Yeah.
Right? Maybe do that. Another thing that I want people to watch, kind of in closing for me, is watch the betting odds of the election.
Okay.
Part of the reason why you're starting to see, if you, it's interesting, you track the betting odds of Trump and Biden, and the market rallies and sell-offs coincide almost directly with who's leading and
Pops and
who's going to
Biden.
get. Yeah,
Yeah.
yeah. And the reason being, not to get political, but the reason being is because there's going to be massive profit taking from anybody who has big profits in place if Biden gets elected, or if there's even higher probability. Because one thing I could say almost for certain is that capital gains rates are going to be much, much higher under a Biden presidency than under a Trump presidency. So
Mm-hmm.
it could be a difference of if I've got, a long-term portfolio that has $400,000 worth of long-term capital gains in it. Do I want to lock in at a 20-25% rate, or do I want to lock in at a 40% rate? I could save myself, $60,000-$70,000 by locking in just a few months earlier.
Mm-hmm.
And so a lot of funds are going to be thinking about that. A lot of long-term investors are going to be thinking like that. So watch the betting odds. And what's interesting is over the course of the last 4 or 5 days, over the last week, Biden's been starting to widen his gain a little bit again. Trump had this big rally. If I'm looking at it right now, Trump had this huge rally in late July or mid-July, all the way through at the end of August, had this really nice resurgence, and we had that kind of convergence happen, and now we're starting to get the divergence again, and we're starting to see a little bit of a sell-off in the market. And I think it's because of funds saying, hey, I don't know who's going to win, but you know what? If Biden wins, I need to hedge myself to make sure, because there will likely be a sell-off in the market, if for no other reason, profit taking and locking in capital gains.
Yeah. And just to be clear and to make sure this doesn't get too political, if you do the research on what a Biden presidency means versus Trump, I mean, look, it only affects a certain tax bracket that is like 500K, a million plus
Yeah,
dollars, which
correct.
obviously long-term investors, super wealthy individuals, yeah, they're gonna take profits, right? It makes sense. Like if you can save yourself 50 to 70, $100,000 in taxes, like you will do that. But
But Chris, who are the people, who are the individuals, and who are the people that can in 2 years move Apple from a $1 trillion stock to a $2 trillion stock?
yeah,
It's the people that have 500,000, a million,
exactly.
5 million.
Exactly.
It's the huge people, and they've got massive returns,
Yep.
and they're going to say, I'd rather pay 25% than 40%.
Absolutely.
So, and that's going to cause a big sell-off,
Yep.
which again, so we could start to
No, I'm
continue
I'm
to
not
see this.
disagreeing with
Yeah.
you at all. And honestly, after all that has shaken out with this entire year, it's like it's still I still feel like this is not a normal healthy market. We're dealing with
No, it's
booms
not.
and busts and bubbles and euphoric. It's just like it's got to somehow find a way to normalize, and it's going to be a really ugly in which it does it. But again, just be prepared for anything. One thing I want to do, Tyson, we'll just take a couple more minutes here. I wanted to go into something we mentioned last week. Let me find my screenshot here. So this is one thing that we talked about here at Market Traders in this Ask an Analyst session, and this is a grade your trade. So I wanted to take one quick example. This is a grade your trade, and anybody out there that's watching this, whether you catch the recording or watching this live, you can submit your trade. Just take a screenshot of it for us and post it on our MTI Family of Traders Facebook page. So for all of our MTI traders out there, you can post your screenshot right here and just put in here, grade my trade. And what we're going to do is we're going to grade your trade. It's going to be myself and Tyson and Gary and Tad and Tion and Chief. We're all going to be taking a look at these and giving our 2 cents on what we think the trade is doing. So what I want to do really quickly, Tyson, is let's take a look at this trade right here that was submitted last week. Okay, so this is a dollar yen sell trade. And this is the screenshot that was provided. So if you can see this, this is the sell trade that was taken, and it is an entry right around 105 and change. I'm actually going to move you out of the way here in just a second. And then the stop is right here off the swing high, and it's going for a profit because we've had that towards the 786 pullback zone, which is somewhat of a deep pullback. We have our limit down here at the 127. So, essentially we can take a look at dollar yen, do some analysis. I know you and I have talked about this one at length. I think the hard part about dollar yen, and as far as me grading this trade, is the traders choosing a pair that is literally a coin flip. Because at one end you've got yen, which if we have a sell-off environment or risk-off environment, the yen notoriously takes the cake. Like the yen's going to be the stronger currency pair of the two. But we've also seen a ridiculous sell-off in the dollar late July, where I think that the dollar comes back with some near-term strength. So we had Prime Minister Abe that's resigning. That was a little disruptive for a couple of days, and then we saw some weird price action on the JPYs. Right now, I'm short Aussie yen, I'm short Swiss yen, I'm short wanting to get short Euro yen, I'm short New Zealand yen. Those are all paying out just fine. Dollar yen for me personally, I'm standing aside. So I was wondering what your thoughts were on this one.
So if this were the only currency that I could trade, I actually like the trade a lot.
Okay.
I think it's a really high quality trade. Fortunately, it's not the only currency that I can trade, because if I look at my current positioning, I'm short the Aussie dollar, which means I'm looking for dollar strength versus the Aussie, and I'm short the Aussie yen, which means if I'm going to place anything against the yen, or not against the yen, but paired up with the yen, I'm going to sell the Aussie yen rather than the dollar yen. So I actually like the short side on the dollar yen. I think it's a good high quality trade that's going to pay off. I think you're going to pay much. I think the Aussie yen short's going to pay much better and much faster, because the Aussie is going to lose value against the dollar also. So I think the trade is good, but I think you're better off in other places.
Yeah. So if it was our trade, right? I mean, obviously we're not telling traders what to do. If it's our trade, you would be short Aussie yen. I am short Aussie yen. I would also be short New Zealand yen. Because Aussie and New Zealand both kind of react the same way. So if we have yen strength and Aussie New Zealand weakness, we would see both of those slide pretty nicely. I do think that if you see my chart here for Aussie or dollar yen, look, I think dollar yen is going to find a way somehow. It's going to find a way to either find this pocket at 109, find this level up here at 111, or it's going to crash all the way back down to 101 or 100. So, I mean, I do think that it's going somewhere. We're probably going to come back and retest these 105 lows. So if you're in that trade from this high, low, lower, high, lower, low, it's perfect. Like, look, that's the stop loss right above there. Go down towards those range lows around 104.80, 10500. That's a great spot for this indecision zone. And then you can look to buy low and take it back up. If it crashes below 104.50, we're probably sliding down into these March flash crash lows.
I do like the way 100% agree with everything you've just said. I like the risk management of it. I like where they have their stop. I like the target. I think they're very reachable targets. And so, again, if this were the only trade that I was looking at and could look at, I'd say yes, high quality trade. I like it. However, again, Aussie yen, New Zealand yen, I like better.
Yep, I agree. So I'd say if we had to choose right now, Tyson, we probably grade this like I think right intentions, decent setup. I'd probably give the grade like a B to B minus, because we think that if you're understanding risk on, risk off, that there are better risk off trades, be it the Aussie yen, New Zealand yen versus the dollar yen. But again, as far as following a plan, great fib, great structure, stop loss in the right area, profit level is realistic, and it's a slightly favored surplus. It's not exactly a 2-to-1, but it's got to be pretty close to like a 1.5 to 1 or greater, which is fine.
Let's give it a C plus, because we want to, because you know what, we're A plus traders, Chris, and we want to mentor A plus traders, and so this is a good trade. It's a passing trade. It's a money making trade. You take this 100 times, I'm convinced you make money on this trade. But you know what, we can do better. I'd say C plus.
Okay, fair enough. So, student out there, C plus trade. Again, hopefully this risk percent is what it needs to be. I wouldn't say all of a sudden they see this Tyson like, oh, I'm gonna stop the trade because Tyson gave it a C plus.
Yeah,
Look,
yeah,
I mean,
no,
if you've got the right risk percent in, it's totally a fine trade. But
correct.
again, what we want is, like you said, following our trading rooms, following our classes, our webinars, we're gonna find A plus trades as much as we possibly
Exactly.
can. Yeah.
Exactly. One way that you could make this, and I don't necessarily know if this would make this a better trade, but you could. I think that if this C breaks, if that
Hmm.
high of 106.50 breaks, then I don't
Yes.
like the trade. So I would
Agree.
actually
Agree. Yeah.
move the stop down there, and then you have a
Yeah.
better, much better reward versus risk. And so I'd give that about a B minus. It's still not great, but I would up it a little bit just
Yep.
because of the better risk versus reward.
I would get, yeah, that's a great point. And that's easy to do. Look, you can just draw a straight line over here. If a daily candle closes higher, I'd say get out of
Yep.
that trade because it's probably
Exactly.
coming back up to that high at 107.
Yep.
Absolutely.
Yep.
Cool.
I
All
like
right,
it.
Tyson. Hey, any final words before we sign off?
No, I think I've said it all. I think we went around about. I chased a couple rabbits in this session with my ADD and all that. But no,
Yeah.
this was fun. It's good to be back. It's been a couple weeks since I've been back on.
Yep.
But it's good to be back. I'm excited about the movements that's happening in the markets right now. As always, I love you guys continuing to follow, the continued support. Get into the trading rooms. All of you, nobody watches. I'd love to think that people watch us and watch me because I'm like the coolest guy in the world, but that's not the case. They watch because they want to learn how to trade and invest, and they want to gain the freedom that this can gain you. And with that being said, the only way that I know of how to do that is to find those who do it and do it well, and then just copy what they do. And that's exactly what you're able to do in our trading rooms.
Yep, agree. So, hey, I'll do the social media algorithm thing, which is just hit that like button for us, give us a thumbs up. We appreciate everyone coming to these sessions. We had about 60, 70 people live today. We want to see more. There's no reason why, Tyson, myself, Gary doing these sessions. Look, we're talking. I mean, it doesn't matter what it is. We'll talk about stocks. We'll talk about our positions. We'll talk about forex. We'll talk about great setups. This to us, like, you have to remember, this is like an outlet for us. We get to
Yeah,
do this. We're all busy during our week, but this is like our favorite thing, is to talk shop. This is what we do on a
exactly.
day-to-day basis, and this is what got us into this business in the first place, is this passion behind this, and the fact that we get to teach and educate and trade and do it all every single day is why we're here. So hit that like button. We appreciate everyone being here. If you have any questions, make sure to reach out, join us in a webinar, get in our trading rooms. We'll see you all very soon. Tyson, thanks a lot for being with us today. Take care,
Thanks, Chris.
everybody. Bye bye.